So somewhere that I've been trying to personally grow as and as an investor, more specifically over the last month or two, but is trying not to overpay for companies because as many of you know, the ways that you can lose money in the stock market, aka underperform the S&P 500, is by overpaying for companies. It can be the best companies in the world, but you could still overpay sometimes. And I'm fine sometimes with overpaying for some of those buy and hold forever businesses, company like Costco. Like when it was trading at $530 literally a year ago, everybody's calling it overvalued. It is up 50% since then. So you never want to try to time the market. But at the same time, you do want to get in a reasonable price because sometimes you can overpay even when a company is down like 10, 15, 20%. A few companies to look at for an example. Nike's a company that's already been trading down. It's still kind of overvalued by some people's DCF models. Starbucks is another company. It was even on like a 15, 20% dip, $80, $90 range. And still, it was, overvalued technically looking at the financials now. So today I'm going to be sharing a few companies that are on my watch list right now, but I think are overvalued, and I'm staying out of it for now simply because of their valuation. First company, Chipotle. I'm mad. Rezi got in at Chipotle at like $2,000, and I said it was kind of overvalued then, and look at it now. It's just one of those examples. But Chipotle, from a business perspective, I really do like it. Bill Ackman, giant investor in it. I like their management. Every time you go to a Chipotle, it's absolutely packed. I don't think it's fad. I think as somebody who's had to, for competition purposes, move to more whole foods, Chipotle is my number one go-to option, like throughout the week if I have to get anything on the run. It's an awesome business model. One could say they're using AI. One could call it an AI company. Somebody's called it that before. But honestly, really good business, and there's a lot of growth to be had still. There's a lot of markets they haven't tapped into yet. But unfortunately, that appears to be priced into the stock with a current PE ratio of 67.63. And just looking at the all-time chart right there for Chipotle, we could pull up the 5 and 10 year as well. I mean, it's a great business, but why should I pay a kind of premium for and buy it at the top? It just doesn't make sense to me. I don't love running DCF models. I think that's kind of gay if I'm being honest, but it is what it is. Another thing that also has kind of held me back from wanting to pay a crazy premium to buy into this company is there's not a lot of longevity with the company. Now, I don't really care. I still think it's going to be around for a very, very long time. But I mean, you have a company like Crocs that's trading at a valuation that it is for a reason. It's because it's not proven to be whether it's going to be staying or it's a fad. I think Chipotle kind of has that same thing. I think it's staying. I mean, I don't see any world where there isn't a Chipotle, especially there's a lot of growth to be had. Like if you look relatively to where they could be, they have so much potential. Looking quickly at their financials, looking at Chipotle's free cash flow, it's been growing since around 2009. Love to see it, and there's more growth to be had. 10-year growth rate of 15.37%, a 5-year growth rate of 29.87%. That's really good growth, but once again, I think it's been priced into the stock. It's unfortunate. It's a really solid business. I think everybody can agree that Chipotle, the margins are really solid on as well. We can go over that. I know some people in the Discord can't comprehend that people sometimes don't want to cook at home and they don't have the time in their busy lives and don't want to pay $10 for chicken, rice, steak, and beans. Some people don't like that, but I'm sure the shareholders do like that. Looking at the margins, though, pretty solid margins. Gross margin of 24.38%, operating margin of 16.8%, and net margin of 13.3%. One could say that AI and robotics and all that stuff that they plan to integrate into their business model will help those margins over time, as I kind of think it will with all restaurant companies. So that's something definitely to keep an eye out on. Shares outstanding. Chipotle also has bought back shares recently. A lot of potential still for that. I wonder if they would dilute shares for growth purposes. I don't think they would. I want to take a look at their debt as well because it is a restaurant company, so they're going to be taking on some debt. Nothing wild whatsoever. Some people also can't comprehend that restaurant companies take on debt. They obviously don't pay a dividend. So Chipotle is the first company on my list that I'd actually really like to look at the right price. I'd start looking at 2000 again. I think that's somewhat reasonable relatively. Who knows? Maybe there's another crazy outbreak in the restaurant and we'll get a nice dip as investors. I'd like that. No E. coli stuff though. Or we don't. Nobody gets E. coli. Next company, Netflix. This is a business that I absolutely love, and I regret not buying when it crashed a few years ago. I love what they're doing. If you saw my post on Twitter, follow at Ryan Dengler Show. But I love what they're doing with the Jake Paul Mike Tyson fight. Mike Tyson, I love what they're doing with that fight. They're making it free basically, so you don't even have to illegally stream it. It's so convenient, right? Like it's nice. And I also love what they're doing with WWE. I'm a TKO shareholder, so I love that they're having Monday Night Raw on Netflix, and they're branching into more live sports. And I think that's a huge market for them. Netflix is a dog in terms of streaming right now, and I say that as a Disney shareholder. Which really sucks because you want Disney to be the top dog, but Netflix is clearly number one. I find myself as a consumer more going towards Netflix than other streaming services that I have access to. I think their catalog is very strong, and I think it's proven that it has staying power even after the years. They have good in-house content as well. I'm not a huge streaming guy. I don't like to watch TV shows every single night. And occasionally, every couple Friday nights, maybe I'll watch Superbad or something on Netflix. It's just kind of what I do. But I think the big thing, obviously, with Netflix looking at its business, free cash flow, it has been there for the streaming company itself last 2 years, and that appears to just be continuing a good chug on. So Netflix, the first streaming company to really become profitable, um, that's just big. I mean, Disney, I think, is right behind it. So clearly, this is a company that knows what it's doing. I really like their management as well. I have the book from the CEO Reed, and it's a company I can get on board with, even as not a shareholder. And I think when you don't have that bias, when you don't have your toes in the water, obviously I'm gonna say I like Disney Plus because I own Disney, right? But like I use Netflix on my own as a consumer. I really love the product. The financials are good, management all good. Margins are insane for a streaming company, like 46.95% gross margin, operating margin of 28.18%, a net margin of 24.86%. Like that's just wild. Looking at their debt, obviously they're going to carry a little bit of debt, nothing really relative to the free cash flow where I'd be like pooping my pants at night. Buybacks, pretty much it's staying flat since 2010. I don't think they're at a point in their business where like they'd be buying back crazy shares. And I don't think you want them to be buying back shares, especially at this valuation. All right. Those are two companies that I am looking at right now that I believe are overpriced, but I would love to add to the portfolio someday if the price is right. All right. I hope you all appreciate the transparency. If you saw my community post, I apologize also. Probably not a lot of edited videos. You can see I'm a little tired. I don't have a lot of time on my hands right now. It's quite literally the busiest time of my life, but it's never not too busy to share two stocks I'm keeping my eye on from a distance. All right. Thank you guys very much for watching. Smash like button, subscribe. Check out my podcast, Cash Flow Kings, going live every Saturday, 8 p.m. Eastern. Best place to be. No doubt about it. Thank you for watching. Do dividend stocks, out drugs, and have a good one.